What's up, value seekers? Today, we're lacing up and diving deep into one of the biggest names in athletic wear, Nike Inc., ticker symbol NKE. This stock has seen some serious moves, and the question on everyone's mind is the bottom in for Nike? Let's break it down step by step. All right, let's kick things off with the market narrative around Nike right now. It's a tale of strategic transition, folks. Management has explicitly called out disappointing financial performance in the recent quarter, but they're also trying to paint a picture of moderating revenue and gross margin headwinds moving forward. Basically, they're saying, yeah, it was rough, but we see the light at the end of the tunnel. This win now strategy is their big play to reposition the brand for future growth. So we've got a mix of caution about recent performance and optimism about future turnaround plans. For those new to the game, Nike Inc. designs, develops, markets, and sells men's, women's, and kids' athletic footwear, apparel, equipment, and accessories worldwide. Think Nike, Jordan, Converse, they're all under this massive umbrella. They sell direct to consumer through their digital platforms and to a huge network of retailers. Now, management's forward guidance is crucial here. They're acknowledging the tough times, especially with that largest financial impact in Q4, but they're firmly stating they expect headwinds to moderate. This guidance is the foundation of our analysis today. So, how do we reconcile this mix of recent weakness and future optimism? We run it through our scenario analysis machine, of course. We've taken Nike's guidance, the current market sentiment, and our own projections to create a robust view of what could happen. First up, our base case, which we're giving a 50% probability. This is our most likely scenario. It assumes Nike successfully navigates its win now strategy. While Q4 was undeniably weak across the board, Nike Direct down 14%, digital down 26%, wholesale down 9%, and declines in key geographies like North America and Greater China, we're taking management at their word that these headwinds will moderate. For this case, we projected a modest recovery with 5% EPS growth for the upcoming fiscal year. Starting with their current EPS of $2.16, a 5% bump brings us to $2.268. Then, we applied a forward PE multiple of 31.5x, which is slightly below their current, balancing brand strength with those ongoing transition risks. That calculation gives us a fair value of $71.44. And why 50% probability, Dave? Because the technical analysis shows NKE has just broken out of a downtrend channel and is currently holding crucial support at $69. This technical posture, if maintained, provides a solid foundation for the gradual improvement we're seeing in this base case. Next, let's talk about the bull case, coming in with a 20% probability. This scenario is all about Nike's win now actions significantly exceeding expectations. We're talking a faster, stronger rebound in Nike Direct and digital sales, maybe spurred by new product cycles or major sporting events creating exceptional demand. We'd also see international markets, especially Greater China, roaring back. Under this optimistic view, we project an accelerated EPS growth of 12% for the next fiscal year. So, $2.16 current EPS, up 12%, brings us to $2.4192. We then apply an elevated PE multiple of 36x, reflecting that renewed strong growth and premium brand valuation. That brings our bull case fair value to $87.09. Now, why only 20%? Because while the downtrend is broken, for this case to truly materialize, NKE needs to not only hold that $69 support, but also decisively break above the $79 resistance, establishing clear upward momentum. We haven't seen that decisive move yet, so we're dialing down the probability. Finally, we've got the bear case, and we're assigning it a 30% probability. This is where things get a bit more challenging. This scenario assumes the win now strategies simply fail to gain traction, leading to persistent revenue declines, particularly in Nike Direct and digital. Macroeconomic challenges or intense competition could further erode market share and profitability. In essence, management's expectation for moderating headwinds proves overly optimistic, and Q4's largest financial impact isn't truly the bottom. We project a 7% EPS decline for the upcoming fiscal year. Current EPS of $2.16 minus 7% lands us at $2.88. We then apply a significantly lower PE multiple of 25x, reflecting reduced growth prospects and diminished investor confidence. That puts our bear case fair value at $50.22. And a substantial 30% probability? That's because, technically, a breakdown below that $69 support level would signal significant further weakness, with the next identified support at $55. This technical failure would corroborate the fundamental underperformance in our bear case, making it a very real possibility. All right, let's pull up the chart and see what the technicals are telling us. Here's what I'm seeing. The NKE chart has just broken out of a downtrend channel, which is a good sign for potential reversal. Price is currently at a critical support level of $69. For NKE to truly change the momentum upwards and signal a sustained rally, it needs to keep price above $79. However, if that $69 support breaks down, buckle up because the next significant support level isn't until $55. So, is the bottom in for Nike? Based on our weighted scenario analysis, where we combine the fair values with our probabilities, we're looking at an approximate fair value of $69.30. $71.44 times 0.50 plus $87.09 times 0.20 plus $50.22 times 0.30. My verdict is this: while Nike has broken out of a downtrend and is holding crucial support, the bottom isn't decisively in yet. We need to see that 79 level breached and held to confirm a sustained upward move. Until then, there's a significant chance of a downside test if the 69 support fails. It's a wait-and-see situation, with a slight tilt towards stabilization if current levels hold. Given our analysis, potential areas of interest for investors would be around the current 69 support level, especially if it holds firm. For those with a more aggressive bull thesis, looking for a clear break and hold above 79 could confirm a move towards our bull case valuation of $87.09. On the flip side, if 69 breaks, watch for the $55 level as a potential deeper value entry point, aligning with our bear case. All right, team, that's our deep dive into Nike. If you found this analysis helpful, smash that like button, subscribe to the channel if you haven't already, and hit the notification bell so you don't miss our next episode. And, as always, let me know in the comments below, do you think the bottom is in for NKE? I am not a financial advisor. This video is for educational purposes only and is not financial advice. Investing involves risk and you could lose money. Always do your own research and consult with a qualified financial professional before making any investment decisions.